Morning, everybody. Hope you guys are doing well. So today, I posted into Daily Bias. I've been watching it for the past 10 minutes or so, 20 minutes or so. I'm having a harder time finding a clear bias. As of right now, I can kind of argue both ways. There's no clear higher time frame SMT inside this gap, and then no SysD or inversion or anything on the hourly to me that confirms we want bearish order flow. So strictly looking at the order flow and the market structure, I would favor bullish price action, but I'm looking for SMT at the highs. I'm looking for anything that may want to negate that bias, and the fact that we're kind of displacing through this 15-minute gap with such speed and targeting London low, to me makes it look like we're gonna have a New York open reversal profile with without any SMT at the highs. So we do have 10 a.m. news, and me being kind of lopsided on the bias, I can't find a clear one, is already indicating, at least for me, reasons why I should either wait for the news to come out or just not participate today. So yesterday, pretty solid run up to exactly what we were looking for. We missed maybe the new high by 10:30, like slightly. Actually, no, we got a new high post 10:30. Yeah. So we got almost everything we wanted yesterday, which is more than enough for the entire weekly goals and weekly range expansion you're trying to capture. But yeah, if it was a bullish profile, there's not really any clear manipulation below midnight, except during literally right at midnight. We got previous day highs of target if you're bullish, but then we should be holding this gap in the order block. The fact that we're displacing through that, creating this as an inversion, creating a high of day at 9:30, then we could see full expansion down into these relative equal lows on the 15 and potentially down to previous day low if we're extremely bearish. But we have no SMT at the high either. So there's no SMT at either one of the highs or the lows currently. There's some at the lows, but this is a good, I guess, thing to mention about SMT. They're always going to have SMT on both sides, so you can't use it as a, oh, if there's SMT here, then my bias is there. You must first find a bias and then use SMT as a confirmation tool. Right, so price cannot reverse most times without SMT. Like 90% of high quality reversals, I would say 95%, will have SMT. The reasons they wouldn't have SMT is if we're in a low probability condition, and the market is just not going to give precision in price like it normally does. So in this case, if we were to take out London low, that confirms that we're going to have just a New York open reversal profile. If we stay hovering around here, we have SMT at the lows. Between these lows, then I would like the run up to previous day high. So I'm keeping a flexible bias today. We'll have to wait for, I think, for the 10 a.m. to come out. And I'm expecting 10 a.m. to expand, given the fact 9:30 is manipulating right now. So there's a macro entry before the news, and it makes sense with the bias. I wouldn't be opposed to entering before this news driver and using it as a volatility injection towards drawn liquidity. But the good rule of thumb with 10 a.m. news is if you're new and you don't have a clear model or a clear entry time, entry criteria, things like that, is to wait for the news to come out. Always wait for the 8:30 news to come out. Always wait for the 10 a.m. news to come out. And that way, in case it has some crazy manipulation where it wicks on both sides and stops you out, you're not tempted to get back in. It's rather wait for that to move. If it moves 40 points, 50 points in one candle, you're not missing anything because it's not your model. Instead, you're waiting for that price action to deliver, and then seeing it if it confirms or denies your bias. So if you have a soft bias and then the news prints and it's towards whatever you want it to do, either manipulate or expand towards your drawn liquidity, then you find a gap after it that increases the probability that that entry won't be stopped out, especially if 10 a.m. manipulated and we form something like an intermediate term low or high at that key time, well then, that's most likely going to be your high of session or low of session. So I'm watching how we react to this inefficiency and the 15-minute inversion gap. Is it inversion still? No. So like when I first looked at the chart, gun to my head, I was favoring bullish price action. Just this weird kind of retracement all the way down, taking out the 1 hour sell side. That makes me a little sketched out. But there's nothing on the higher time frame, the 1 hour, the 4 hour, that confirms we wanted to reverse. Just because we have these sibis forming doesn't mean that we're now going to reverse. We had no clear market structure shift, no clear SysD, no clear SMT. One of the, 3 of the major things you need for reversal, we had 0 of them. So I'm looking at this as rather a larger Judah swing. We're going to have an SMT at the bottom, trades through these gaps, and if we even take out that 930 high, then we expand all the way up to the previous day high. But you can see the classic London protraction profile is not really clear today or yesterday. Yesterday we kind of had this weird London expansion, and then in here there's not really much London's doing. Now we did just close that candle within the gap, although we wicked and took out sell side. So watch, here's first presentation gap, technically. Look how we're just speeding through this bearish order block, and now if we close through that gap, we got a pretty strong bullish bias. Yeah, we do have SMT at the lows of the 15. Let me screenshot this really quickly. So I'm watching how these 1 minute gaps should be used as inversion. I'm going to just pair them with the bisis on the right side. A gap here. And I'm expecting it to actually come all the way back down and touch the discount end of this, because for gaps to be efficiently filled, you need both buying and selling. So in this case, for this gap, for this sibi to be efficiently filled, you need to see both buying through it and selling through it. So even if we have a wick that comes down and touches the sell side or the discount end of this sibi, to me that'd be almost perfectly balanced. We don't have any inefficiencies below that besides these breakaway gaps. And then obviously the less that we can fill of this indicates the strength of the current market. So if we just close around 50% of this and then we start to move back up, take out that high, that should indicate how strong we are. We're leaving breakaway gaps behind and then failing to fill inversion fair value gaps all the way where they're now efficiently delivered. So we're leaving a lot of inefficiencies behind. And those inefficiencies can be used as entries and indications of speed towards whatever our target is. So we could fib project this last manipulation leg. And that gives you 2 to 2.5 and then 4 up here. This black line, I think, is the buy side we marked up from yesterday that we never ran out. So still a valid buy side pool. And then from here, basically down to about 55 points. So you can see there, we're tapping into the inversion gap, but we're not even filling it all the way. So to me, that's already an indication of strength. We closed through all these sibis. We shouldn't even be touching. We're trading into this 5-minute breaker here. And you can see we're even wicking past mean threshold of the breaker. I don't care we're closing. We're expecting it to close past it. But the fact that we've been tagging that far up with all these PD arrays below that should support us. The rule of thumb typically is 3 PD arrays. So once you see 3 PD arrays broken, you either reassess your entry or you reassess your bias. or you start to look at different stages of price delivery, where say price is expanding. If we switch to a retracement stage of price delivery, it's going to look like we're breaking PD rates, but rather we're just retracing into premium or discount of that dealing range. Does that make sense? So, I'm not, in that kind of scenario, I'm not going to be looking at that as a, my bias is wrong. It's just, oh, for the current short-term draw, the short-term bias, it might be wrong here. Reversals will have the same signature, except then you're looking at SMT, you're looking at confirmations as to why that reversal should hold price. So we're entering into the macro time here. Now with 10 a.m. news, the 950 macro sometimes can be a little funky, especially when 10 a.m. is going to manipulate. You just kind of see this weird 950 entry into the 10 a.m. manipulation, and then 10 a.m. starts a whole new market maker model. There's the tag into discount of that gap, like I mentioned, even if it's just with a wick. Then obviously you could mark up 50% of this dealing range here. You have a gap in discount. This is the gap fully in discount, but this fair value gap lines up with discount of that dealing range. Take a look at what ES is doing. So they wick down into their order block for value gap. It's a bit cleaner price action over here on ES. This is what you like to see with manipulation, like still respecting the 15-minute order flow. We've got a gap, order block, candle body closing above within the gap. To me, that indicates we want to move higher. But you can see the clear SMT between these lows, here and here, and then here and here. So NASDAQ is the weaker of the two. So you'd expect it to take a little bit longer and have a little bit more difficulty moving higher. But regardless, we still have SMT down here with ES. So it came down. You can see how we're using that inversion fair value gap pretty nicely. Now we're starting to expand back up. And if we get a closure through here, it'd be a short-term SysD out of a gap. You would prefer if that low is then later formed as a intermediate term low. So what I'm looking for is for a full closure through this SysD, expansion up, creation of a short-term low, and then further expansion back up into the previous day high. So if we can form and that's important because if we form that intermediate term low prior to the news coming out, I'm looking at that as a protected low. So if there's something like SMT on that low, or it's an intermediate term low, or preferably both, then I know that preferably if the news comes out, it's not going to wick out that intermediate term low. Now, the fact that we just formed a low right on top of this gap makes it a likely soup target. So I'm paying attention to that. And it's obviously not an intermediate term low yet. But if we do form one, then I'm expecting 10 a.m. to just clean expand. In this case, I'm still expecting it to expand. I want 10 a.m. to just open and just rip higher. I do not want to see it come down and start to meander around in this range, or come down and take out a swing low and then be lethargic and moving up. It can sweep a swing low instantly, but it should be like an open. Within 2 seconds, it takes the low out, and then within another 5 seconds, it's up above whatever the current high is. But preferably it just opens and then shoots and gaps towards the buy side. So the current drawn liquidity right now is 21,896.75, and that is the previous day high. So an important time-based liquidity pool. And that's decently close to 21,900, which is a round big figure. So you can imagine institutionally what that's going to have on the market. So tiny gap here. We got the SysD. I'm going to clean some of this up really quickly. And then tiny gap right here. I want to see how that's held. If you can hold that, that's some of the best price action you can get. Intermediate term low, filling a gap, short-term low to the left of it, short-term low to the right of it, and another potential intermediate term low after we fill this gap. Now the 5-minute order flow is not flipped back bullish yet. You need to see either a closure through this sibi or a closure above the 925 bullish order block. Sorry, bearish order block. That'd be a sys-D. So the 5-minute order flow currently is bearish, but you still got to look at the higher time frame. So just because the 5-minute is bearish doesn't always indicate that it's going to displace in one way. You want to use the 5-minute as a confirmation time frame. So look at the 5-minute as the most important lower time frame chart there is. Anything below that is subsequent to the 5. So when I'm tape reading on the 1-minute, it's really just the 5-minute with more data, if that makes sense. Same thing with the 3. Like the 3-minute and the 5-minute, if you're going to start tape reading, I think those are the two best time frames to look at. 3-minute is going to give you more data, but not as cluttered as the 1. And then the 5-minute, the order flow in the 5-minute is just beautiful most times. So when I'm looking, if I was looking to trade the 5-minute tape reading, understand there's going to be more order block / sys-D entries on the 5 than there is, not that there is on the 1, but you're going to have less fair value gap entries than on the 1-minute chart. So it's good to keep that in mind as if you want to trade the 5-minute. If you want to trade the 5-minute, it's best that you have some understanding of what order blocks look like, high quality order blocks, sys-Ds, and how those entries serve within the greater market maker model that you're trading. The 1-minute is going to have a lot more gaps to trade. So if I was trading the 1-minute, I would strictly use something like 1-minute tape reading. You're going to be using unicorn setups or for value gaps in discount, we'll say plus 50% dealing range, plus another order block preferably. So we got 4 minutes to the news. Never formed that as an intermediate term low. Coming back into this gap here, right around discount. So I don't really know at this point what the news is going to do. I would have liked if we were expanding above the 930 high. And at that point, 10 a.m. is going to clearly not gap up, but limit up. Moving all the way back down into discount, all the way back out down into these gaps. Below the breaker now. You can see the breakers right there. This is D. There's another gap right here, right in discount we're trading into. So disrespecting these bullish PD arrays now. This breaker is basically the last line of defense I was looking at. And you can see now going to 10 a.m. the bullish bias is harder to frame. You've got the bearish on the 5-minute, order flows holding, you've got the gap there. Such a large retracement into premium, right? We're not even tagging any important PD array above here. So these kind of price action, these moves here where we have gaps forming as a retracement leg, and then you have this quick energetic move down. This is why it's hard to trade both in January and before 10 a.m. news. You got to just either wait for the news to come out or completely skip something like this when it's low probability 10 a.m. news. And just call it there. Now I'm curious to see what this news does. Like now I could say, okay, my bias is bearish, but we have no SMT at the highs. No clear indication as to why we wanted to move lower on the higher time frame chart. So we're just going to wait. Sloppy BA. Even on ES, it's not super clean. It's a little bit better here because you actually have a gap up there. Like you see the 5 minute, there's no sibi on that dealing range between the 930 high and the 940 low. But here's your news in around 20 seconds. High impact, red folder news. And you can just wait and see. We'll probably just look at if there's any entries below after that. I like to look between 10 o'clock and 10:20-ish, that 20-minute interval. I guess you're just trading silver bullet basically. But you can use the rest of the macro time. You can use the silver bullet, and there's your just limit down. So this is what I wanted to see to the upside. This quick expansion, running it out. But now you can kind of assume it's going to be a either swing to Z or New York Open reversal profile. But I'm not interested in it anymore. This is a little bit too sloppy for my liking. But look, if we form a gap here on top of this, get a 1 minute opens up, you know, the 101 candle opens up, 102 candle fills the gap. You could potentially use it as a scalp down to whatever available liquidity pool is left over. But in terms of sell side objectives, you've got these relative equal lows down here. Let me actually type this up in predictions. No longer interested in bullish PA. So I could screenshot this. There's your relative equal lows tagged, and then the previous day low would be all the way down at the midnight open. So previous day, I guess sell side down here, but then you got London ERL. All these would be used as valid targets. So you got that gap that formed, like I said it would, but no entry into it quickly. Let me mark out that sell side. Heck. Oh, there we go. So midnight open there, that sell side, and then you have this ERL. Both are valid exit points. Then obviously the relative equal lows down here if we want to get down there. I guess you could fib project this. It lines up right around that cluster, the last manipulation leg up there. And you have your -1 to -1.5 lining up around this gap, so you can see if we get an IO Fed silver bullet entry. What is this down at? 21,540. There you go. Tiny gap filled. See if we want to use that for an IO Fed lower. So good day, at least for me, to study. Why does this look different from my tripping? 10:03. Why is this delayed? Hold up. Other chart is not on the right time. It's behind 1 minute. I don't even know how that's possible. There we go. Okay. But this is a good day, at least for me, to study, and I'll explain why. So going to the day had very not a clear bias, unclear bias going to the day. So in terms of the checklist, that removes 9:30 as an entry opportunity for me. If I'm not clear as to what it's going to be, there's no way I can use 930 as an entry. Because for me, 930 is like a quick, energetic volatility run towards whatever my draw is. So I skip 930 then if there's no clear bias. Then I go to 950. Now, what are the rules surrounding 950 entering into the day, depending on the news profile and depending on the current price action? If, in this case, it is to skip the first 10 minutes, then I'm going to wait for that news to come out, unless it's clear. So surrounding 10 a.m. news, people will ask me questions on, when do you like to enter on 10 a.m. news? In the beginning, when you're learning, I think it's best to just simply avoid these days, as it's going to mess with just like your general understanding of how price action delivers in the New York session. It's not all the time going to be perfect. It's just sometimes it's really funky and it's hard to trade on. So in the beginning, I would say just avoid them. You don't need them. What's the point in trying to burn mental capital on something like this? There's no point. Then I would say start to look at anytime after the news releases. Once you're comfortable with that, then you switch into before or after. But anytime before, you got to get in really close to 930, or you have to know exactly where the news is going, manipulating or expanding. But typically that's easier said than done. So I would say if you're going to trade before the on 10 a.m. news, you have like a probability of entries. Typically silver bullet's going to be the easiest. Then you're going to have macro time post 10 a.m. Then you're going to probably have 930 as an entry. And then you have macro time before 10 a.m. So in terms of easiest to hardest, it's going down in the list. So depending on, I guess, avoid. This is what you would, if you're learning, or if I was relearning it, what would I do regarding these days? This is how I would do it. Avoid the day altogether, then learn silver bullet / macro time, but mostly focusing on entries post news release, just for a scalp. You don't need to get the entire weekly range off of that one trade. It's just if you can scalp a tiny gap towards a liquidity pool, like in this case, we've got this gap lining up right around -1 to -1.5. We're within the macro time, within silver bullet as well. We've got a clearer bias. It's not super clear bias, but clearer bias. Now, the one thing that's odd in this is we already took out London low. We already took out PM session low. Both of those are discount PD arrays. They're sell side objectives, but they're both also a discount PD array. So when you're seeing a discount array tagged, what do you expect to see? A short-term retracement into premium. Tag this, no retracement into premium. Tag this, no retracement into premium. So either one of two things. We're really weak, or you're going to see a stop run later on in the day where we're creating a false high. We're going to run it, go back into premium, and then distribute. Now, based on the fact that we're filling this gap, leaving this as an open one, and if we're holding this bearish order block before it even prints as a high quality one, to me, that all indicates that we're extremely weak rather than the other one. So at this point, I'm just looking for it to expand again, kind of see this displacement through as we tag 21 to 540. I'll screenshot this, put in predictions. This would be an example as well of flipping bias, or I guess having a soft bias going through the day, waiting for news to come out, flipping bias after you see confirmation tools. So it's not just that the news printed down that I've been able to flip bearish, multitude of different things. Stop run at 930, creating high of day. Inefficiency here, being held on the 5-minute with the order block, displacement, secondary displacement. We've got no clear, the SMT at the lows was not holding. If it was a classic London protraction profile, you don't want to see London low tagged. Bunch of different things all paired together that make it easier to flip bias. And in the beginning, I highly suggest you not even to attempt flipping bias, because it's going to decrease your trust in the model and in your own concepts and analysis. And you're not going to know when to do it. So I would say once you've maybe done 3 months or 4 months of bias, just back to back to back, then, and you've traded on demo using that bias, then you can look to, okay, what are some indications, some high probability signals that if I have a clear bias and I'm clearly wrong, that I can flip it and then participate in it. And if you can't find a clear checklist to identify when you would be wrong, then it's best to just completely avoid it altogether. SMT at 946 to 953 work. You're talking about up here? Yeah, it wouldn't be terrible. Now, the importance of this SMT is this is like momentum SMT. So it's not going to create the high or low of the session. I would have liked if there was some sort of SMT at the high at 930. We never got it. If we had it going into, oh, we may have PD or ASMT. I did not look at that. Okay, well, can't be perfect. Okay, we got a gap there, traded into. One of the harder ones to spot, and then we have a gap here that's failed to. Well, I wish I would have seen that, but coulda, woulda, shoulda. So there's PD array SMT up there, and you can see how weak we are now, right? Gap being held, order block pretty nicely. Sell side down here at 21,520. So wait for this to be tagged. I would actually expect it to expand further past that. Did I mark out both those right? Yeah, I did. Okay. Then we got sell side down here. I don't care about Asian in this case. I want PM session low. So that'd be the next DOL down at 21,474. So look as we pop it here. $16. But yeah, if you figure out a bias, if you take 20 minutes, 30 minutes, 15 minutes, however long it takes you to find bias, and you get a clear one, play with that bias. Don't instantly try and self-doubt. It's easier said than done, but you're going to have these thoughts of, what if my bias is wrong? Or what if this is not what it's supposed to be doing? Just let it happen. And if it's clearly wrong, you're clearly wrong. Then you can learn from it. From experience, it's much harder to learn from a day that you constantly flip bias from, because you don't know if you were right or wrong. And you self-doubt, you second guess, you have confirmation bias in your head that plays out of, oh, I saw this here, so therefore my bias was right today. It doesn't even matter if you were right or wrong, to be honest. You shouldn't even care about that. But it's harder to learn from those days because the memory of it is foggy, rather than if you had a clear bias, executed with the bias, right or wrong, much easier to deal with. There's a tiny VI here I'm going to mark out, just because right now it's being respected. Now, volume balances are the weakest PD array, the most flexible ones. So most times when you see them and they're traded through, it's not a big deal. But if they are respected, that indicates that one of the weakest PD arrays is holding. Therefore, you could look for continued price action delivery in whatever the DOL side is. It's like in here, candle body respecting it. We do have an order block you compare with it, low probability one. Black lines. This would be the ERL. Let me mark these out. But the 15-minute chart, it's London low from previous day low at midnight, and then the PM session low from yesterday. All time-based liquidity pools. So we're still looking for this sell side to be tagged. The London low from yesterday. And if you're in the PDF group, if this is the high of the day, you can start to time when the low is going to form and what time we're going to approach to form the low on the current day. So if that DOT, whatever you're thinking of, is the true DOT, whether it's noon or later, well then any low that's formed before that is likely to be ran out. Not necessarily we're going to speed through it. We can still have retracements and stop runs on the other side. But you constantly use those as drawn liquidity targets. Good thing to mention as well for bias before I forget. When I have a bias and I'm anticipating 930 to manipulate, so say there is an inefficiency and I'm bullish, most times I don't care how far 930 manipulates unless it's clearly breaking order flow. So I'm not predicting exactly where 930 is going to go unless I'm trying to turtle soup it, which is pretty clear. You know, you're going to take out that consolidation high, like in this case, consolidation below a higher time from PD array. You tag it, you wait for a closure below, and then you can get in. That's an entry technique though. I'm saying for in terms of actually reading 930, if you're trading the 950 macro, let all of this just play out and print for your own data. And then once you get all that data and you've 15, 25 minutes of data, it's much easier to make a decision during the macro time. And that's why I say most people should study the 950 macro as an entry in the beginning. It's going to give you the best, I think, the best ranges for the day. And you can find a high quality macro entry almost every single day in 950 to 1010. And then you can study how it pairs with different models. But I would favor the kind of trading that I like to do is one where I have an entry for every single day and every single market profile there is. And I'd rather not use it, understand it and not use it than not understand it and try and force something that's not there. Because for me, having that certainty builds confidence. So depending on what your personality is and what the kind of model you want to trade, the 950 macro may be enough. Or you could be trading 930 turtle soups or 930 expansions. It's whatever makes the most amount of sense and is easiest to grasp visually and manage yourself emotionally, right? Like I can't take more than probably two trades per day on a live account without it starting to be like after the second trade closes, I know I'm more likely to make an emotional decision because my mental capital has been spent. Most times my first trade is the best one, and I'd rather be in a trade for an hour or two than constantly trade after that. And figuring out what that mental capital is, that time-based mental capital, it could be 90 minutes for you. It could be 2 trades. It could be 1 trade. It's normally less than what you expect it to be. So don't come into this and think, oh, I can take 3 trades on the day and be good. I can take 3 macro trades. And if I win one of them, I'll be fine. That's how I used to think. I used to trade the 850 macro, the 950, the 1050, 1150, and 1250 macros, like back to back to back. And it was brutal because you, after a certain point, you lose grasp of what's actually happening in price, and you're just zoomed in on the 1 minute pattern trading. And you don't learn anything from that either. So we've got this retracement back into the order block, probably a 2 minute gap there. Nope. 3 minute gap. Nope. Nothing. Huh. But trading back up into short-term premium of this range, it's probably a lower time frame gap within this. Go to 15 second. There you go. Gap in there. Back to the 1 minute. We're expected to see this 21,540 and 21,520 go. I'm expecting both of them should go, and we actually should dig into 21,474. If we don't, it's not a big deal. But based on the time of day we're forming the high, everything else being pretty weak, I think it's safe to assume. So here's your first limit tag. There you go. Second limit should be approaching soon. We can see how actually wide these dealing ranges are. This is 20 points. We've got so much volatility recently. So would the 5 minute SysD technically be around market open? Yes. Correct. Most times it is around market open. See you later, Smashing. Appreciate you. So in this case, if we can form a tiny gap there, there you go. See how it fills. I wanted to come back down. We do have this supporting order block too. And is that an intermediate term high? No, never mind. I thought this was a high right here, this wick, but it's not. You can see what time we tagged at sell side at 10:18. But most likely, we're not going to leave this gap open. The same with these gaps down all in here on the 5 minute. You can see this larger gap. I'm assuming during lunch or even during the rest of the New York session, we're going to come back and retrace into that gap. So I'm imagining all these swing highs to be ran. Not right now, but sometime in the future between now and 1:30, we should run all of those. And then come back down. But depending on how the day closes, we can kind of frame that as a potentially weekly high being bearish into tomorrow, but NFP protocol. By the way, with NFP Mondays, it's such a large news driver that typically they want to build sentiment in earlier on the week. So you're going to have better moves earlier into the week on an NFP. Now, the day of NFP, you can trade post news release. Sometimes it's a little bit harder. The two hardest days that ICTs personally said that he struggled with is the day before NFP and NFP itself. So it's best to avoid both those days. From my own experience, trading on NFP day after the news release isn't that bad. There's going to be some lack of precision in price. Most times, time of day is pretty on point. You're just using like any other 8:30 news driver. But yeah, so that means Monday is going to have most times a quick run to build sentiment, like a juicy run on Monday or Tuesday, targeting either previous week high, previous week low, and it looks like clean displacement. You want that to happen on Monday of NFP. Other Mondays, you're expecting to be accumulation, right? You're expecting it to accumulate the weekly stops, consolidate so we can manipulate during 8:30 news or some sort of high impact news driver. And then it starts to move later into the week, like Thursday, Tuesday to Thursday is where you look for those entries. NFP week, you look from Monday to Wednesday, New York session. So remember, this 21,520 level technically isn't any sell side liquidity. It's just the previous day low at midnight. So liquidity has been ran out. This, I guess you could mark out as like a dotted line or something. Not as important. But liquidity has been tagged. But look at the time of day we ran this out at. 10:18. So you can start to build framework with that. It's good to study. I think that this is likely to be another draw. So we're going to run this out later on before noon. Probably down into 21,474 because it's the next liquidity pool. But you can see how well actually we targeted into that 1 minute fib projection. I guess was it the 5 minute fib projection? 15? It's 15. 15. High, low, higher, high, last manipulation lag. You take that, distribute it down. -2, -2.5. And you can start to study in each of the stages of price delivery. You can see between -1, -1.5. Right around there, you got a gap that formed. And that would be your entry. You can also take, never mind, 5 minute manipulation leg. And there. Even if you drew it from here too, that's fine. But it's good to study. You don't have to use something in the beginning. It's best if you want to test something out. Just play around with it each day until it makes sense. Once it makes sense, then you can start to implement it into demo trading. Took a loss prior to 10 a.m. Impulsive since it was my first trade on the eval, but I managed to manage my risk the correct way, and that's my takeaway. Perfect. That's all you need. Good discipline, good patience, good execution of the risk. Trade may be subpar, but control most of the things you can do. Take it on and you drop risk for the next day. But yeah, that's exactly how you should look at it. Never P&L, never outcome, always execution and process oriented. So we're probably going to gap back or trace back up into the 5-minute sibi. Like I said, what happened earlier. Now the supporting order block is quite far, so I don't know how far we're going to gap or trace into this gap. You know, you can start to mark out consequent encroachment, things like that. But it could trade all the way up into around London low and come back down, and I'd still be fine with that just because of your order block right here is at 940. So if we were to tag the order block and then come all the way back down, it's still valid, although it would have been a little bit sloppier than I would like. I posted the stream recording yesterday, a little bit later in the day, but it is up if you want to go back and watch that. It's posted into the YouTube vid section. Don't forget that on Thursday as well, we're going to have a no price action. It's like a bank holiday for Jimmy Carter. So don't show up on Thursday. Probably could think about it on Friday too. Friday's stream, by the way, will be based on price action. So the rest of the week stream, Wednesday and Friday, I'm going to base it solely on the current day's PA. So tomorrow we have 8:30 news, but there's also FOMC minutes. So I'll probably just spectate it. Look if there's anything good around 9:30. If there is around 9:30 or 9:50, I'll stream. Trade and stream probably. If there's not, no stream on Wednesday. Same thing with Friday applies. Clear DOL, clear profile, bias, all that stuff. Then I'll look to stream on Friday as well. It may be lower quality on Friday because I have to stream off my laptop, but it can still be done. Anyways, we're trading to this gap. I'm still expecting lower prices going into the rest of the day into lunch. It's around 10:27 right now, so approaching 10:30. But by noon, I would like to see if that lows ran out. Technically, in terms of the price action, it's still post 10, so at the minimum, it's met, and we've reached a draw on liquidity on the hourly chart, so that's the minimum. But the fact that we're reversing at New York, I'd like to see it expand into lunch. So you're looking for market maker sell models out of a higher time frame PD arrays. You're looking for reasons to frame short setups on demo, obviously, if you can find one. Or you just watch it and see, okay, we can continue to move lower. If we don't, and I'm wrong, and we expand back up and close above these sibis, then you start to look at it as just a void day. Void for the rest of the day, rather. So, journal. To me, this is a good day to journal because it's an unclear bias. How can I either find a bias from this? How can I learn from it? Or how can I avoid it altogether? Anything you did right, anything you did wrong, the things that you want to keep the same, the things you want to change. Always answer those 4 questions when you're journaling. Okay. Otherwise, screenshot the day, go back in, delete everything off your charts, screenshot it again. It's important things. It's the important work that people don't want to put in. But if you just do it for like 2 weeks to 4 weeks, you'll see so much more improvement than you realize. So do the things that are necessary to succeed, and 100% is guaranteed to you. That outcome is guaranteed to anyone who puts the work in. So the rest of the week will be day to day. I'll probably have one backtesting stream either tomorrow or on Thursday, one of the two. So be on the lookout for that. Bring any questions you want. And then I think I'll probably run a PDF sale for the New Year's until February starts. So I'll send a ping out on that in the next 3 days or so. So I appreciate you guys joining. Hopefully it was insightful and you learned something from it, even if the bias was wrong in the beginning, how to flip bias, what to look for, and how to find entries as a result using key times and things like that. It was recorded. I'll post a recording later today as soon as it's done rendering and I can upload it. So, but actually, before we leave, look at the gap being traded into and then one PD rate being violated. So you get inversion gap there, potentially SysD. I marked it out subconsciously without even saying anything. If we get a nice sibi forming, look for something like that down into the new low down here. I'll screenshot this actually one last time. Anyways, so take care today. I'll see you guys rest of the week. Lord willing, on one of the streams. So good luck, good trading, and peace.